All right, as we begin 2024, there's a hot topic out there that we want to discuss with you today, and that is real estate over the stock market, and which of these is going to be the better investment here in 2024. In fact, Gary J left this comment on one of our videos. We appreciate that, Gary. And he says, given the state of the housing market and the current stock market over the last year, what is the better move? Traditional investing in stocks, bonds, mutual funds, investments, things like that? Or should we lean more towards real estate? And then he asked, does how close I am to retirement make a difference in which strategy is best for him? And so, John, if you want, give us a little answer on to how we feel about real estate, stock markets, and specifically towards retirement planning.
Well, I mean, that's a big question. And the truth is, Gary, it's different for everyone, and neither one is bad. Personally, I think you can be overexposed to either one of those. And we would consider both of those, the market and real estate, to be long-term investments, and different for everyone in different asset classes. But let's kind of unpack both of those. Most people are going to come into our office, they're going to have savings that they've put in 401ks or IRAs, and that's going to be in the stock market. That's a good thing. The market is going to go up and down. 2022, the market was down. 2023, it was up. This is an election year. We'll see what happens. Inflation is still out there. But long term and over time, the market has been a place where if your money is effectively managed, yes, you will have losses, but over time you will have gains. You're also going to have higher liquidity in the market with things that are in the market, which is something you're going to need in retirement. Now let's talk a little bit about real estate. You know, the common sort of belief out there now is interest rates are high, but probably going to drop. I think the Fed has communicated that for 2024. And so I've heard everything from we're going to have a real estate collapse like 2008. I don't think that's going to happen. Inventory is very, very low. Nashville, for example, and surrounding community is growing. There's a lot of people coming here. And whether now is a good time to buy real estate or not can depend on the city that you live in and what the purpose of that real estate is. And so I think real estate, much like the stock market, is a good long-term investment if it's bought well. For example, one of the things people say about real estate now is that interest rates are high, so I should wait till interest rates come down. Well, but if interest rates come down and more people come to the market, you could see those prices go right back up. Yeah. And you might get a lower interest rate, but you could pay a higher price for a house or rental property or something like that. And so what you really want to factor in, and this is one of the things, Dan, we do with our free financial plan checkup, is we look at your stock market money and we look at the fees that are associated with that, not just what you're paying the advisor, but the internal costs. Can you save money in costs on your investments? That could give you income or expendable income to use towards buying a piece of real estate. And when you look at fee analysis, it's very substantial in a lot of cases. We're going to look at the risk analysis. There's risk to anything you do. You know, there's risk to the market, there's risk to real estate. And then probably a big one for this particular topic is we're going to look at a tax analysis. You know, Dan, you can't always just go take $500,000 from your IRA, for example, and go purchase a property. You have to understand the tax consequence to that.
Yeah, that's right. And there are, if it's going to be a second home, there's ways to buy those. If it's going to be an investment property, there's different ways to buy that through self-directed IRAs, so you're not taxed on the full distribution. You know, we believe in a balanced approach to all of investing. People come in and they're all in real estate, and that's all they've ever done. And that can be a good way to invest, but they're not very liquid. Most of those people don't have a lot of liquid assets, so they're counting on the real estate market to always perform. Most years it does, but some years it doesn't. That's not too unlike the stock market. Most of the time it goes up, but some years it doesn't. So having a balanced approach is important. Whether you want to be a landlord, right? That's important when it comes to real estate. Do you want the headache and hassle? Or if you're going to hire a real estate company to oversee that, you're going to lose some of the potential earnings or interest on that property. So having a more detailed financial plan checkup can really help you identify if real estate is going to be a good addition to traditional investing in 2024. I think real estate has a place, but there's a lot of risks and headaches that can come along with that, so you just have to be able to identify those. Thanks again, Gary, for your question, and thanks for watching today's episode of Retirement Talk. Subscribe on the channel here to get more episodes just like this.